Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
Hey Lauren, I wanted to talk a little bit about investing internationally.
Oh and, yes, international.
The interesting thing is our portfolio, as you know, you and I are both aware, has a very strong presence in the global investment world.
Yes.
And we, besides the United States, we're in like 41 other different countries.
Yep.
And an interesting thing happening this year is people are very much focused on the growth of the U.S. stock market and the S&P 500 and the Dow, of course. And but they're not really maybe as in tune with what's going on in the international arena of investing. So one thing is this article at the Seattle Times, which is a little outdated because as just recently we've had a nice run up in the indexes, but even for both international and the U.S.
Right.
But most of the international indexes that we look at are up year to date in their local currencies.
Right.
But if you take the fact that the U.S. dollar has been so strong against international currency,
yep.
Many of the portfolios, because they're U.S. dollar denominated, are either flat or maybe even in negative territory for the year.
Exactly.
So what's your take on that?
Yeah, that's one of those surprises that I don't remember anybody predicting at the beginning of the year, that the U.S. dollar was going to be so strong
Right.
that it was going to leave everybody else's currency in the dust. I think it's one of those good signs that explains why you diversify at all. Though the same thing can happen if the U.S. economy has a poor year. That
Right.
Sometimes the dollar then does poorly, and other stock markets do well by comparison for that reason.
Right.
That happened a lot, but I think that what it shows is that there are just these surprises out there that nobody predicts, nobody thinks are going to happen, and I think that it does show though that there's a good reason to still be positive about international markets. The markets themselves, well, other than Russia, the markets themselves are actually doing pretty well. Again, with one big exception.
In their international currencies.
Yeah,
and I think you mentioned that. I just want to be very clear. At some point in the future, the U.S. dollar will decline against a lot of these international currencies, and so we'll get the reverse effect.
Yep, that's right. Exactly right.
All right. So we're not changing our tune. We want to still stay internationally diversified.
Absolutely. That's right. And in fact, what you want to do when this happens is you want to rebalance, buy more of those international stocks. As much as that does not feel good, and it doesn't feel good for me to do it, but that's why we have it done mechanically.
Right.
So that my emotions and Curtis's emotions do not have anything to do with what actual decisions happen. Because we experience the same thing everybody else does. On an emotional level, we don't want to do it. But it's the right thing to do.
Yeah, and to end this episode, for the clients that we are currently helping co-manage our assets, they are being rebalanced and we are buying these because they're cheaper. All right.
That's right.
Well, thank you, Lauren, and we'll see you next time on Erickson TV. Bye now.
See you next time.